Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Man, when I tell y'all I was knocked out, I'm trying to get myself together, man. Brother. All right. How come when you wake up you be itching? When you wake up you be itching. Let me see if my I also figured out. Remember I told y'all how. Man, remember I told y'all when, like with this Windows 11, my sound, everything be acting crazy. I also figured out that if I'm already like playing something like inside my Streamlabs, and then I plug my headphones in, it don't switch the sound over in the headphones while it's playing. It's like I have to plug the headphones in before, and then when I tell you Windows 11 is a pain, oh my God, it's a pain. Anyway, that ain't why y'all tuned in. Y'all tuned in to hear me talk about price action. Speaking of that, let me open up my trading view while I'm talking, thinking about it. All right. Y'all tuned in to hear me talk about the price action, man. Oh yeah. Y'all got me just being rude, man. Gang. How come y'all just ain't gonna tell me, Tim, you ain't even said what's up to the people? You know what I'm saying? You just jump right in complaining about Windows 11. I ain't said what's up to the people. I ain't, you know what I'm saying? Y'all got me out here being rude, man. Jolly Pies. Rewind. Good evening. If this first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome. but I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just me, Big Spot, if you don't hablo español. And you're now in tune to another episode of NQ Price Action Recap. yeah, man. just like just now. I couldn't hear that in my headphones because I plugged my headphones in after I had already started the what's the name? I don't know. Because like right now my sound is set to like everything is set to default. Everything is set to default, but for some reason, right, I can't hear the sound. If I plug it in after I already started up the whatever, I can't hear the sound. All right. Shout out to everybody who up in here. We got in here in the gang. I got a lot of stuff going on my screens, man. We got Steve up in here. What's up, Steve? We got Rhonda Green up in here. We got light-skinned Deborah up in here today, y'all. Light-skinned Deborah. We got Lump up in here. We got Marco up in here. Speaking of Rhonda Green, shout out Rhonda Green for finally pulling up to lead the tape reading session today. She had been hiding in the background, trying to pretend like, you know, she hadn't volunteered. As I stood there and asked, "Hey, somebody volunteered to do the tape reading? Who was it?" Sitting back there, mum's the word. Didn't say nothing until he learned and she called the out. "I think it was Rhonda." He looking like Jim Carrey on Liar. "It was me." Shout out Rhonda.
I came back. I think you were saying everything that I would have said, so I just let you carry on.
Yeah. She said I was saying everything she would have said anyway, so she should let me carry on. I love it. Shout out Rhonda Green for pulling. Y'all give it up for Rhonda Green. Doing an excellent job today. Pulling up, walking us through the tape reading session. Gang. We sprinting now, man. We getting to the point where, you know what I'm saying, we ain't just sitting back trying to you know, just look at or listen to what Tim's saying just as confirmation to what I'm thinking. No, we getting out there in the front and we thinking about that hard right edge of the screen, and we're vocalizing this is what Price should do, because since Price did this, then it should do that. I know it feels scary when Big Bad Wolf Timotheus speaks and says, "Who's going to lead the class?" Everybody's like, "No, not me. I'm not ready." Sure you are. You're ready. Because guess what? On Monday, Tuesday, Thursday, Friday, when you don't have Tim on the live stream talking about what the candles are going to do, you're looking at these candles and making these decisions on your own already. So why not just exercise those little spider legs and strengthen them? Builds confidence, man. Builds confidence when you got to get out there in front of people and commit to something that you see. It builds confidence, man. Shout out Hit, learn, and share over there in the YouTube land. Shout out Kim. Shout out Honey. Shout out Tish over there in the YouTube land. Rocky on the acoustic. Okay then, Rocky on the acoustic. I have never seen that name before. Now I know I ain't tripping. I know I ain't never seen Rocky on the acoustic before. Shout out Rocky on the acoustic for pulling up to the gang. Rocky, if this is your first time tuning in, welcome. If it's not your first time tuning in, or if it's not your first time me saying your name, I jalapaz. I try to remember their names, but I've never seen that name before. So welcome, Rocky. Now, without further ado, let's get into the what's the name, man? Did price do anything today that caught you off guard? Did price do anything today that gang, am I sharing my computer sound with y'all? When I be doing the effects, can y'all hear that? Am I sharing my computer sound with y'all?
Yeah, we can hear it.
Okay, all right, just wanted to make sure. My dog Sherwin ain't cheating on, ain't moonlighting on us today, is it? I don't hear nobody.
No, he giving a grandbaby a bath.
Okay, yeah, I ain't hear nobody talk about no counters in the background today. Here, learn and share said, great job, Rhonda. She proud of you. What's up, Tyreek? Shout out Tyreek pulling up in the building. Hey man, y'all give it up for Lump. If it wasn't for Lump, I would still be sleeping right now. I would still be sleeping. I had my alarm set. My alarm went off. I turned my alarm off and I went back to sleep. And if it wasn't for Lump, I'll still be sleeping right now. Lump just called and woke me up. Y'all give it up for Lump, man. Give it up for Lump again. Hey, while we giving up for Lump, we're gonna go ahead and see a quick clip from our sponsor. This episode, like I already told y'all in tune to the price action recap, right? In the price action recap today is being brought to you by the magical Fibonacci tool. Trading secrets that feel illegal to know. Yeah, hear me. Yeah, feel me. Coming soon. All right. Yes, I was sleeping. The magical Fibonacci tool is coming soon. All right. So let's go ahead and get into today's price action recap. That is not the daily chart. So let's get up here to the daily chart. I didn't see anything in the chat and I didn't hear anybody talking about excuse me, that price did something that caught him off guard, right? Price probably couldn't catch you off guard today because, Rhonda had us set up, so we knew exactly what to expect. So that's why the price ain't caught the gang off guard today. Good job, Rhonda. Now, we're looking at the daily chart. As we said, right, we have come down into a sell side liquidity pool from the higher time frame, right? We have had a reaction at this point. All right. Now we have two daily PD arrays that we're watching to help us understand what price wants to do from this anticipatory reactionary point. Y'all ain't heard me say that in a while, right? Y'all ain't heard me say that in a way, not that way, right? But this is our anticipatory reactionary point. this higher time frame liquidity pool, right? We have other ARPs down here, right? But we have touched one and we're seeing discount sensitivity. So now, whenever you see that discount sensitivity or that premium sensitivity, you want to identify PD arrays from that same time frame, be it a higher time frame or an intraday time frame or a low time frame. You want to identify PD arrays from that same time frame that will help support or invalidate the thesis. Okay, and right now those PD arrays for us is this daily SIBI here from March 26th. We have this broke down into octants, right? And this bearish order block right here. Okay, what did we say? We said if we close above consequent encroachment of the SIBI, right, that will be showing strength of price and weakness of that SIBI, right? That wasn't the end all be all, because there's also a bearish order block right here that has a job to do, and we want to see it close below consequent encroachment and mean threshold, right, of the two PD arrays. And if we come here and we look at the order block, we can see that, right, we close below mean threshold of the order block. Why y'all ain't tell me I have a fancy dancy on? We can see that we close below mean threshold of the order block. We did close above consequent encroachment of the fair value gap. All right, so price is hinting at a little bit of strength because we closed above consequent encroachment, right? But it still has not invalidated the sell program because we're still closing below mean threshold of the order block. All right. Now, Tim, what invalidates the sell program? Now, if you're talking about in the short term, coming above this high right here, right, that invalidates the sell program in the short term, right? And why is that? Because looking at, right, what we've done, we have taken out the sell side, right, and traded back above the buy side. So in the short term, that invalidates the sell program, but in the higher time frame, that's okay, that's allowable, because we're in a deep sell program. And when you're in a sell program in the shorter time frame, it's perfectly allowable to take out the liquidity in the direction you want to go, come back, take out the opposing liquidity, right, and then turn around and come back. Here in the gang, we call that a wig snatcher, because if you have any internal liquidity that does not invalidate your overall order flow, it is very common and highly anticipated to see price go in the direction you want to go, especially when you only poke just poke a toe into the liquidity pool, like dick it, right? When you come to the liquidity pool and go dick it like that, just come up to it and dick it. and then turn around and take out that internal liquidity, right? And then rush on down and get to where you anticipated going to, like another anticipatory reactionary point. That's very common. Now, that's just a little gem I threw in there for extra. So now, right now, in the short term, the sale program is not invalidated, right? And even if we came and took out the internal liquidity, that still would not invalidate the overall sale program. All right. Now, we just started April, right? We just started April. This is another thing to think about in terms of, is the selling over, right? We just started April today. Okay. Which direction did we go on the first day of the month? We went up. We went up first. All right. So if when you first start a candle off, right? When you first start a candle off, ideal price action is to go in the opposite direction of the true move, because that's the manipulation that draws the people in who's trying to pick a bottom or a top, right? And when you think about the power of three, the power of three explains that to us. You start out, you accumulate, you manipulate, and then you distribute. Accumulation, manipulation, distribution. So that means when you started out, price is going to go in the wrong direction initially and then come back based off of power of three, right? So not saying that April is just going to be a bearish month that just tanks forever, but just thinking about the power of three, we're starting the first day of the month off going up, right? So you can, how can I use this, Tim? You can say either this is going to be an extremely bullish month that never comes down and makes a bottom wick, or this little, let's check him out. This little 9-point wick is all April is going to have, right? That's how you can look at that. Okay. So with that being said, we're opening up the month going up, right? And since we're opening up the month going up, right, taking out a weekly high wouldn't be out of the question to continue down and come back into the higher time frame PD rate, right? Wouldn't be out of the question, right? You always want to be looking at what is price most likely going to draw into, right? What is price most likely going to draw into? What is price going to do? What is price telling me? And you want to always understand, how do I need to watch these PD rays? All right. Right now, the order block is still within its realms. Even right now, the SIBI is still within its realms, even though we closed above consequent encroachment. Why is that? Because we got a order block that's resting right there, right? And we're still respecting that. But Tim, what do you mean? We traded above the consequent encroachment, so that should just invalidate it off the rip. I'm glad you said that, little Timmy Rogers. Journey with me, if you will, and take a look at our, what we like to call, the PD array matrix. Right? So, this is not only the order in which IPTA creates these PD arrays. This is the order in which IPTA seeks these PD arrays out. Right? So, if you are looking at the candles over here, and you're looking for the PD arrays, all right? This right here is our highest high, right? This was our lowest low of our range when we started out. We extended our range down, right? And so this is our range, okay? And price is in a sell program, right? So you want to see price come back to a premium of the range. And then when price comes back to the premium of the range, right, it's going to be seeking out the PD arrays, because this is the way they're created. Now, all PD arrays aren't going to be there all the time, right? All of them aren't going to be there all the time, but the ones that are there, the algorithm is going to seek them out, right? In the order of operation, PEMDAS, if you will. And as price is coming back up, price hit the bottom, it came up. Ignore all of this right here. Why are we ignoring that? Because this is in the discount of the move, right? So as you're coming back up, right, and you say, Tim, I see a bearish fair value gap that's down here, right? We're ignoring that. Why? Because it's in the discount of the move. And then once we get above it and close above it, right, it's now an inversion fair value gap. Okay, it's now an inversion fair value gap. And when you have a inversion of a bearish fair value gap, see this right here, it's the first fair value gap created when we left this area right there, right? So as you come back above it and close over there, boom, it qualifies as an inversion. Now that you have an inversion fair value gap, now it is a bullish PD array, right? And where is it resting? In the discount of this range right here, okay? Up here, you got the bearish fair value gap there, right? You say, Tim, it's closed above consequent encroachment of that. It's showing weakness, right? Remember, I told you, even if it closes above consequent encroachment of this bullish fair value gap, that's okay at this point in time, because there's a bearish order block sitting right there. And if we look over here, what is IPTA looking for inside this right here? It's seeking bearish fair value gaps, right? It's seeking bearish order blocks, right? And it's also seeking bearish breakers and bearish mitigation blocks, right? It's seeking, which one is it seeking first, right? It's seeking the mitigation blocks and the breakers first, right? It's seeking those first. The bearish order block, right, is seeking it after the fair value gap, right? So if it comes in, okay, it sees a fair value gap, right? It's seeking the order block that's after, right? But if we look at what price did as we're leaving, as we come back, as we leave there, right? That's a high there. That's a low there. That's a lower high right there. And then we leave. What gives you, what do you get when you have a high, a low, a lower high, and then you leave that area? what do you have, right? You have a bearish mitigation block right there. So what is it? What is the first thing it's seeking? The mitigation block or the breaker. Where's your mitigation block? In this case right here, right? This is your bearish mitigation block right here, right? So you have mean threshold of your mitigation block right there. Well, Tim, you wasn't talking about the mitigation block. You was talking about the order block. You're right. I was talking about an order block. Why? Because this order block is resting inside the last down close candle of the mitigation block right here, like that. And if you look at the last down close candle of that mitigation block, and you look at the order block right there, both of those mean thresholds are right there in the same place, right? And y'all already know I don't like to put a whole lot of gunkity gunk on my charts, right? But since I know that my last down close candle of my order block, I mean mitigation block, mean threshold, and my order block are roughly in the same place, right? I'm focusing on my PD arrays that I'm coming to as I come up in price. What am I hitting first? I'm looking for that sensitivity because I would prefer for low resistance that we be reacting right here inside the wick of that mitigation block. That's what I would prefer, right? I would prefer reacting to that wick inside that mitigation block, right? That would be my preference. But in the order of how the algorithm seeks them out, right? If these PD arrays are present, right, this is the order in which it's going to seek it out. So since there's a mitigation block present, right, it's seeking, it's again, it's allowable for it to close above that consequent encroachment, because we have other PD arrays that the algorithm is seeking to get to, and we're still respecting them, right? We're still respecting them. So now you understand, if we get daily closures above the fair value gap, right, we're still not invalidating anything, right? If we get a daily closure above mean threshold, consequent encroachment of that is fair value gap, a closure above mean threshold of the bearish order block, we still haven't invalidated anything. Then if we get a closure above mean threshold of the mitigation block, now we're starting to invalidate the bearishness in the short term. And then now you see right here, right, if we come up here getting a closure above there, what are we likely to be taking out? That high right there that we spoke about, that says it invalidates the bearishness in the short term, right? But it doesn't invalidate all of the bearishness, right? Y'all do me a favor, hit a like for the algorithm, and subscribe to the channel if you ain't subscribed. Hopefully y'all can see what I'm hopefully y'all can smell what the rock cooking. Hopefully y'all can smell what the rock cooking. Feel me? Did I confuse anybody with what I was talking about just now? Or does anybody have any questions about what we was talking about just now? Now remember, stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Right? You never want to be guessing about, I think price is reacting there. I think price is you always want to have an algorithmic reason of why price is reacting at a level. If you can't visibly see it, if you don't have it marked on your chart, you want to step back, right? Analyze your dealing range, analyze your PD arrays, analyze from each time frame, right? From the higher time frame down, analyze, start with your dealing range, look at your PD arrays, right? And then start coming down through your time frames until you see what is the algorithm reacting to based off of algorithmic principles. You never want to assume, I guess we're just bouncing here because of that. I get, because you're missing a piece of the puzzle. If you can't tie it to, oh, we're reacting to this algorithmic level, we're reacting to that algorithmic level, you're missing a piece of the puzzle and you're just gambling, right? When people, I hear people say all the time, hey, what's the strike rate of your strategy? I don't know. I don't know the strike rate of my strategy. And the reason why I don't know the strike rate of my strategy is because when my strategy don't work, I say that is because I did something wrong, right? Because based off of what the algorithm does, right? If you wait for the proper time at the proper price, your strategy should never fail if you're doing it based off of what the algorithm does. When we interject what we think, that's when we start making the strategy fail. Because if your strategy is based off of an algorithmic principle, if your strategy is a sweep of liquidity, a retracement back into a bullish or bearish fair value gap, right? That's never gonna not work. The only time it's not working is when you're choosing the wrong fair value gap. You're trying to sell in a discount, or you're trying to buy in a premium and you don't know that you're doing that, right? You're trying to sell on a bearish fair value gap that the algorithm intend to use as an inversion when you should be buying off of it, right? It's like you're missing something. You're missing something. You're not aligned with the algorithm, right? You're not aligned with the algorithm. And yeah, you can say, Tim, what about manual manipulation? Yeah, manual manipulation is a thing. You will get chopped up inside manual manipulation, but we've already shown, even during manipulation, they can't stop the algorithm from being the algorithm. So if you're in sync with what the algorithm is doing at that time, right? When you get stopped out, it's something that you missed. You missed that manual manipulation. Yep, you missed it. It did. And when you go back in hindsight, you can see, oh man, it was showing me right there that manual manipulation was in the mist, and I missed that. When you go back and look at it, when you take off the beer goggles and you look at it with sober eyes, later you be like, God dog, I missed it right there. That was my clue that they was manipulating the market, and I missed it. You don't believe me? Go back and check it every time. You'll see it every single time. Not saying that you're going to be 100%, but when you go back and look at the trades that you lost, you can find what you did wrong and what you missed every single time. So what does that mean? That means there's nothing wrong with the strategy. That means the strategy is perfect. That means that we are messing the strategy up, and that's why we get losses. That's why we take losses. Yeah, man. Man, that man crazy. The man talk about strategy perfect and that, you know, man, ain't gonna take no loss, man. What the man talk about, man? Man, that shoe. Hey, man. Y'all do me a favor, hit a like for the algorithm, share this with somebody who y'all think might get something out of this. Before we drop down into the intraday time frame, do anybody got anything for me? Going once? Going twice? Fee times are made it. Let's go ahead and drop down to a 60-minute time frame. All right. As you can see, I got some stuff marked out on my charty tart here. All right. We talked about this a little bit during the public pre-market analysis. By the way, speaking of the public pre-market analysis, I've decided that on Tuesdays at 9 a.m., I will do a public pre-market analysis. This morning, Wednesday at 9 a.m. this morning, we did a public pre-market analysis because I didn't get a chance to do it yesterday. All right? I didn't get a chance to do it yesterday, and so I did it today. Now, the reason why I chose to do Tuesday is because, one, I want to add value to the channel for the people that's not in the gang, and two, I want to add value to the gang by giving them an extra day of pre-market analysis with myself, because I know that it is not only helpful, but it's reassuring when you get an opportunity to hear the mentor, if you will, speak about the levels that they're watching, and it helps you, I guess, trust your levels a little more if that's the same thing you're looking at, or it may add something to your radar that you wasn't thinking about, right? Or it just, it may just be one of the things where, hey, you want to fade the mentor and see how good you are, and you want to, just, prove me wrong. I don't know why you use it, but it gives you 4 days to get the pre-market analysis as opposed to just 3 days with one tape reading session. All right. So Tuesday, for those that's not in the gang, if you want to check out the pre-market analysis, Tuesday at 9 a.m. Every Tuesday at 9 a.m. Unless I just don't feel like doing it. I'm just going to be honest with you. Unless I just don't feel like doing it. Now, we opened up today right over here at this gray box right there. That's our new day opening gap right there. For those who don't know what a new day opening gap is, a new day opening gap is the difference in price from when price closed at 5 p.m. one day and then opened at 6 p.m. the next day, meaning, the futures start at 6 p.m. at night. So when the futures day closed at 5 p.m. on Monday, right? When it closed Tuesday, when it closed at 5 p.m. on Tuesday and then opened at 6 p.m. on Tuesday, that was the Wednesday's trading day starting, right? So from the 5 p.m. close to the 6 p.m. open, that gives you your new day opening gap, right? And your new week opening gap is just the 5 p.m. close on Friday to the 6 p.m. open on Sunday. It's the same thing, except for it's starting a new week instead of a new day. Okay, so this is our new day opening gap right there. That's what we opened up. And as you see, I have this SIBI, this 12 p.m. SIBI marked out from Thursday. Okay, the reason why we have that marked out is because that's the first SIBI in this move down right here. Right, see, as we move down there, that's the first SIBI. All right, we're watching that SIBI because price is in a short-term buy program, right? Based off of we are in this sell program over here. We've come down to an anticipatory reactionary point. Came up, got a break in market structure, right? A bullish break in market structure at that. And so now price is in a buy program, right? And we continue that buy program straight away at the open. We just continue to go up. And since we're in a short-term buy program, right, you want to look at your high probability inversion fair value gaps, meaning the first SIBI of some displacement leg. You're looking at those high probability inversion fair value. Just like the other day, if you remember, we were watching that SIBI right there, right? That was the SIBI we was watching. Why? Because that was the first SIBI in this move down, right? We were watching that, right? Price used it as an inversion fair value gap. You can see right there, we opened up just on top of it there, right? And price continued up, right? Now, what's the next SIBI we're watching? Tim, why are you not watching that SIBI right there? That's not the first SIBI in this move down, right? That's not the first SIBI in this move down. When I'm looking at this area right here, right, I'm not watching that SIBI right there. I'm watching that breaker right there. I'm watching that breaker right there. But Tim, why are you watching that breaker? How quickly do we forget? What is IPTA looking for first? Bullish mitigation blocks and bullish breakers. Right? Right? Get it? We have traded back up. We got a break in market structure. Where does the break in market structure happen at? When you're coming up and you trade above those highs, creating those breakers and mitigation blocks. And then you start to consolidate there at that break in market structure. What are you sitting on top of? That breaker or that mitigation block, right? So when we come over here and we look at our charty tart next to our thingamajiggy, you know what I'm talking about, right? We came all the way down here, right? We trade all the way back up, right? Remember, this was our range over here. We was looking at that high. We'd come all the way back down to that low right there. That was our range right there. We trading back up. Trading back up. Trading back up. I'm trading back up. When I get to this line right there, what's that line over there? Equilibrium, right? And so when I trade above that equilibrium, right, what do we have sitting right there? We have a breaker sitting right there. Right? See it? Did you see it? Did you see it? Did you see it? Ooh, my secret. Right? So we got that breaker sitting right there. So I'm not paying attention to that gap right there. Why? Because that's not the first in this move down there. This is the first. So I'm paying attention to that fair value gap. Right here, I will be paying attention to that breaker. So when we come above here and create that breaker there and we start hanging out right there, notice, right? Let me move some of these lines so you can see it good. I'm going to stretch it out for those of you who are maybe on your cell phones and stuff like that. Get out of here. All right. Open this up. Let's do this right here. I'm going to go ahead. Remember what we said? We said if price is exceedingly bullish, we want to see that sensitivity, right? And this is the wick of this bullish breaker right here, right? This is the wick of that bullish breaker, okay? Look at the sensitivity in price at that bullish breaker. We're just inside the wick, right? We're just inside the wick of that bullish breaker. Price comes down, can't even make it to consequent encroachment. So what does that mean? It's defending the lower half of that wick with everything that it's got. Everything that it's defending it, right? And then price moves back up above the fair value gap that we were watching. And once it moves back above the fair value gap that we was watching, look at the consequent encroachment of that fair value gap. So right here, the algorithm was telling you I'm exceedingly bullish because I'm having this extreme sensitivity at the wick of this breaker. I didn't even get back down into the price, the actual body of the breaker. I'm showing you extreme sensitivity at this breaker, right? So no, I'm not looking over here saying, oh, it's reacting off the inversion fair value gap. No, I'm not doing that, because I don't put every inversion fair value gap as an ICT inversion fair value gap. Why? Because this is not the first imbalance that's leaving that area. So I'm not looking at that as being used as an ICT inversion fair value gap, but I do have an ICT breaker sitting right there. Right? I do have an ICT breaker sitting right, and that's the wick of the breaker sitting right there. Right? I do have a huge ICT bullish order block sitting right there, and that's the wick of that order block sitting right there. Right? I do have that right there. I do have those things, right? But the breaker right there, extreme sensitivity off the breaker, showing that it's extremely bullish, right? Extreme sensitivity at the inversion fair value gap. Why? It's the first SIBI that was created coming down. Once we closed above it here on this 2 a.m. candle, it's now an inversion fair value gap. And once we come over here and trade back down into it, extreme sensitivity, right? Yes, this 5 a.m. candle traded down into this lower imbalance, traded down into this bullish order block, right? This is your bullish order block right here, but it didn't even get to mean threshold. What does that mean? Extreme bullishness. So it's showing you not one time it's extremely bullish by not being able to make it to consequent encroachment of the wick inside that breaker, right? It didn't show you, it showed you again, right, with not closing below consequent encroachment of the inversion, and then without even being able to make it to mean threshold, right? And then again, right, not being able to even make it to consequent encroachment of the inversion fair value gap. So it's showing you over and over and over that it's extremely bullish, right? Extremely bullish. And then we continue up into the next first gap right there, right? Pay attention now. This is the first from this move right here, right? And once we clear this high right there, this is the first for the overall move coming down, right? So that's why we're watching those two SIBIs on this time frame, because you always want to pick the PD arrays that are going to be used as ICT PD arrays, right? You don't want to just pick any random fair value gap. You don't want to just pick any random mitigation block. You don't want to pick any random anything. You always want to have a reason for why am I picking this PD array and what do I expect this PD array to do. All right, get it? Got it? Good. Right? So yeah, man, that's pretty much it for the intraday time frame. We just kind of, you know what I'm saying, we just kind of slow crawling our way up, right? We slow crawling our way up. All right, we opened up, right, came down. This is the low of that daily fair value gap, that SIBI that we're watching from March 26th, right? Went to the low, all right? We came up, came all the way above consequent encroachment, right? And we traded all the way back down and used the lower quadrant, right, as support. We're wicking below, but we stay, that's that lower 25%, right there. Then we rallied all the way up above the high of it, right? Went up into that fair value gap, then we came all the way back down to consequent encroachment again right there. So you can see how we're stair-stepping up those quadrants and even the eighths. I was just focusing on the quadrants right there, but you can even see the eighths in there also, how we're reacting at those eighth levels also. But I was just, you know, focusing on the quadrants because I like to look at the quadrants, right? If I go there, those are the quadrants right there. I like to focus on the quadrants because my eyes are used to looking at the quadrants. The eights just give you that added fine tuning, but you can see how, right, we're utilizing those quadrants on the hourly time frame to stair step up, right, as we're stair stepping up. And then there's some more buy side up there if IPTA is still strong and wants to attack buy side. You got some internal buy side up there, and then you got some buy side up here resting at these relative equal lows up here in an extreme premium of our dealing range there. That's the highest high, that's the lowest low, right? That's our all of our internal liquidity inside that dealing range there. Okay, so again, price could very well take out all this liquidity and keep going down. But if we came up and took out all this liquidity, right, we might as well use this daily SIBI as a inversion fair value gap to take us up, right? Because if we look right there, right, that's the first SIBI created on this entire move down right there, right? That's the first SIBI on this entire move down there. So you get there and you use it as an inversion to push you up if the algorithm is still, you know, gunning for more upside. Now we're coming up into this balanced price range. So for the bearish sentiment, you want to see that used as resistance to push us back down, right? But if the algorithm gets strong, you want to see it push through this with very little hesitation. Because if you're below a balanced price range and price is bullish, the algorithm should cut through it like butter, letting you know, hey, I'm bullish. Just like we looked at the signatures of it showing us the strength over and over and over and over. You want to see that strength as it cuts through that price. All right, y'all do me a favor, man. Hit a like for the algorithm and subscribe to the channel if you're not subscribed. Thank you. Do anybody got any questions before we go down into the New York time frame? I mean, into the New York session. Is anybody confused about anything? Does anybody care about anything that I'm saying? Okay, everything is still here, so I don't have to redo anything. Everything is still on here from this morning, from our tape reading session, so I don't have to that would sound crazy. I ain't got to adjust anything. Turning on this right here, that gives us that shows us our entire New York session right there. All right, just a little indicator I use just so we can quickly see like the time frame of the session. All right, it goes from pre-market at 7 o'clock over to the New York close at 4 p.m. So this is our New York session right there. All right, so looking at our session as a whole, right? Looking at our session as a whole, we can see from the pre-market, right? We came in, pushed up, dropped down, right? But before dropping down, we had this large spike up right here. Price rallied up there. Then we came down, there. Then we kind of kaboof duffed around for a while, whole lot of kaboof duffing, right? Bunch of back and forth candles. You say, Tim, I can't know how to see the candles, but you ain't got to see them. You just talk about what it did. Then we came up here, a lot of kaboof duffing there, right? Kaboof duffing up there, bunch of kaboof duffing up here. And then once we got over here into the afternoon session, price loosened up, right? Started to loosen up more. So it was more fluid in the afternoon. Look at the way the candles just are moving in the afternoon as opposed to how it's moving in the morning, right? Now, if I come over here, now spread it out a little bit so that, oh, it's tweaking. I don't need that on the screen, right? So if I spread this out a little bit like this right here, now we can get a good look at it, right? We'll come over here for just from 9:30. We're not gonna focus on the well, this is our pre-market high, pre-market low, right? That's where we started at pre-market. That's our pre-market high, pre-market low. So I'll just move it over to the pre-market high and low. Now look at the difference in how price moved. Look at how price moved from pre-market throughout all the way up until after lunch. Lunch ends right here around 1:30 right here. This is where lunch ends there. This starts the afternoon kill zone right here. So this is the start of the afternoon kill zone. Look at the price from pre-market all the way through lunch, and then look at the price during the afternoon kill zone, right? And I don't have 4 o'clock in there, so let me take this off. Boom, there you go right there. All right. All of this kaboof duff, then nice fluid move to the downside, and then we react off of this distribution below that morning low right there. Now, looking at this low right here, right? That low right there is from around 10:30 or so, right? That low right there is from around 10:30 or so. All right. We have, this is right. We start here at like 10 o'clock right there, right? And then when we get over here, we're doing a bunch of kaboof duffing, and then we make this low around 10:30, and then price starts to move. Okay. What does Michael teach us about the London close, right? A lot of times during the London close, right, he talks about how IPTA will move against the traders that have been winning in the morning session. And a nice target for you to aim for would be those lows or highs resting around that 10:30 time frame, right? You know what I'm saying? Around that 10:30 time frame, whenever it makes a predominant low between 10 and 10:30, right during that 10 o'clock hour, that 10:30 time frame, it ain't got to be right on 10:30. Right, you got that little range of time, that little block of time where you're looking for a predominant low, right? That right there, right, it was made around 10:30-ish. Okay, we didn't attack it during the London close, right? If we look at the London close, this the London close over here, right? We gave a little pump fake, right, like we was going to come down, right? We came up here with kaboof diffing. Right, we gave a little pump fake like we was gonna come down, but what was happening right here at this little pump fake, right? Where is this pump fake occurring? See right there, it says pre-market buy side, right? That's our, remember we said that was our highest high during pre-market, right? What do we say happens when we get that break in structure, right? When we trade in outside of this dealing range right here, what happens when we get that break in structure? Right, we are trading on top of either a breaker or a mitigation block, right? And we come over here and we stretch this out here. Get out of the way, line, move, right? Price, when we said we had that spike in price, right? Moving, drop in price, moving, kaboof diff up, take out that high. What's resting right here? Bullish breaker, right? Where is price reacting? Inside the wick of that bullish breaker, right? We have this huge bullish order block right there. Remember, don't this sound familiar? We was just talked about this somewhere, right? We got that huge order block right there, right? All this right there. But look what price is doing over here at that fake me out, right? At that coming there, consolidating, and we drop down, right? All we did was drop back down into that breaker right there. In this case, we even touched the wick of that order block. But when price comes up, right, this close to a anticipatory reactionary point right there at the high of that PD array right there, and we just start just consolidating there. If you ever hear people say markets don't top like this, right? Only thing we did was come up here and we started engineering liquidity. We moved into an area of accumulation, right? Right? If it was a smart money reversal, it wouldn't be looking like this. It wouldn't be all of this back and forth, back and forth, back and forth, back and forth, right? So you're not anticipating price to just fall, crater from here, because we're doing too much, we're engineering too much liquidity, right? We're engineering too much liquidity. So then we drop down and we're right here at a breaking structure. We drop down into the breaking structure, right? Into the wick of the order block. Wick of the breaker and the order block, right? And then we displace up, taking out the high and create a fair value gap there, right? So then we trade back down into the fair value gap and continue up, right? So that area right there that was showing you, okay, that's a pump fake we're going into the London close, but we're not showing a reversal pattern. So you're not looking to come attack this obvious liquidity made around that 10-10-30 area, right? But never fear, IPTA is here and it has not forgotten about that sell side, right? Let's thicken it up, right? It has not forgotten about that sell side. No, it has not, right? Because once we came over here into our afternoon session, all right, let's mark out our afternoon session, 1:30 over here to 4. All right, going to our afternoon session from 1:30 to 4. Once we get over here in our afternoon session, as you see here, right, now price, we kaboof duffing, right, we rally up there, right, then as we come down, we get a breaking structure right there, right, we trade back up into the SIBI right here, and if you notice, let's blow this up, right, let's blow this up right here. All right, this right here, that's the first SIBI created as we came down, and if we look over here, it's directly across from the first BISI that was created when we went up. So since this is the first BISI that we created when we came up above these highs right there, right, we created a BISI right here, way up here at a treetop tall area of our range, right? So as we came back down and created, now it's an inversion because it's that first BISI that we created up here in the premium, right? Trade back up into that inversion fair value gap, back up into that first SIBI and lined with that inversion fair value gap, right? And then drop down, taking out the low again. So once you drop down and take out that low again, right, showing a desire to want to continue down, right? We're right here at the fair value gap, right? That we're watching to see if it's going to be used as an inversion, right? We have offered buy side and sell side delivery extensively as we came up into it, right? Used it as support here to send us up, right? And then as we coming back down, slice through all of this right here, trade back up, pretty much slice through. This is kind of, it ain't as slicey as this, but right, we traded back up into the imbalance, right? Cut through it, and then once we get all the way down to the low end of it right here, right, and we take out that low, right, from there price doesn't even try to retrace. Cutting through all of this area over here, don't even try to retrace. Why is that? Because like we said, when you're above a balanced price range and price is bearish, you want to see the sign that is bearish. Just like loosey goosey, cutting through all of that right there, right? Loosey goosey. Okay, then once we get down here, right, after we've taken out that structure right there, this right here is minor sell side, right? You got minor sell side right there. This is that obvious low from the morning, right? This is the obvious low from the morning. This right here, this is minor sell side from the morning, right? So when we get to the minor sell side, we pause. Tim, why is it minor sell side? Why are you saying it's minor? God dog it. Why are you saying that it's minor sell side from the morning? Because this right here is the obvious low during that 10:30-ish time frame, right? We rally up. Yes, there's a little swing low right there, but this is the obvious low there. Rally up. We do this kabuff duffing, and we create another obvious low right here, right? During that London close time around 11:30, and then we rally up. So from here to there, right? That's our range that we're looking at, right? This is our highest high, right? And this is our lowest low inside that range right there, all right? This right here, this minor sell side right there, where is it? It is right below equilibrium. Let me thicken up these lines so y'all can see them, right? That's our equilibrium right there, right? I'll make them solid so they don't look like everything else. No, that ain't do good. That ain't do good at all. I'll make them dotted. That ain't doing good at all either. But anyway, I'll just make it. I'll just do quadrants. All right. So we come here. This is our equilibrium. There's our minor sell side, right? Inside this range, right? That's your sell side liquidity right there. That's in the discount of this range. We hit our minor sell side and we pause for a second right there. We pause right here at the bearish breaker, right? Price comes back up, pauses at the bearish breaker right there where we have that breaking structure, right? Remember we said when you get a breaking structure, you're gonna sometime pause at that breaker or mitigation block. We pause there at that breaking structure, and then price melts down, right? Comes very close to the obvious low from that 10:30-ish time frame, pull back up a little bit, and then drops down into that obvious low, that morning low that Michael taught that the algorithm will seek out, right? It didn't seek it out during the London close. It didn't seek it out during the lunch, but it sought it out in the afternoon session. came back, and once we took that low, right, we had a nice reaction off that low after distributing positions below that low, right? What do we have the distribution at? Above highs and below lows. How do you know it's distributing positions or offsetting positions? Because you get that reaction in the opposite direction. As soon as we hit that liquidity, boom, we pop back up, got a break in market structure, traded back down into the fair value gap, and then slowly start to move back up, right, into the range. Then stop there at the halfway point of the range, because if you come from here to there, now you've created inside of this bullish range there, right, going from the high outside of the low, now you have created, right, a new range on this side, and we came back up to the 50% of that new range right there, just kind of hung out there, then closed there in between the lower quadrant and the equilibrium point at that 4 p.m. close right there. Right. So yeah, man, that's all I got, man. That's all I got. We see how price utilize the levels of the daily SIBI to climb up into this hourly SIBI from, I can't remember the time it was. Let's go back and look at the time. 1 a.m. last Thursday. All right, that's the 1 a.m. SIBI last Thursday. That's the first SIBI in that range there, right? And then just looking at the hourly time frame, we can see, right, we've set this area there, traded up. Now we've come back down into it. Now, for this buy program that we're in, right, we're above this balanced price range, right? We've traded up and we've come back down, right? So now you want to see this area act as support. You want to see price come back down and come over here, right? You want to see price come back down and come over here, right, and reclaim bullish order blocks, right? You want to see it come down and reclaim bullish order blocks, right? If this is going to act as support, right? You have a down close candle right here that gave a reaction, gave a bullish reaction, right? This would be a candidate to be a reclaimed order block when we come back down to it, right? The next candidate, we got a small little bullish reaction off of this last down close candle, but that ain't nothing to write home about. And then plus that's way down into the range, right? So right here, you'll be looking for that bullish order block to act as a reclaimed order block to keep up this buy program that's going right there. That's how reclaimed order blocks work in the sense of a market maker model, right? Man, I'm giving y'all all kind of gems today, man. I'm giving y'all all kind of gems today. That's what you would look for for if it's gonna act as a reclaimed order block. I done jump back up to the hourly time frame and start talking about all kind of stuff. But yeah, so that's it, man. That's all I got, man. Do me a favor, hit a like for the algorithm. Subscribe to the channel if you ain't subscribed. Do anybody got anything for me? Any questions? Do anybody not understand anything that I was saying? Did I confuse anybody on anything? Shout out Felicia for pulling up in here. Y'all do me a favor, man. If you're not in the gang, put a 1 in the chat so I can see who hanging out with us today, man. If you're not in the gang, put a 1 in, and don't be putting the 1 in the chat if you not in the paid portion of the gang no more. Oh, I used to be paying to be in the gang, but I'm not no more, so I'm gonna put it in 1 in the chat because I'm technically not in the gang. Like how What's her name was yesterday? Her name's slipping me. Laverne? Was it Laverne? Okay. I guess everybody in the gang that's watching, or they just say I ain't gonna put nothing in there. Lorraine, that was it. Lorraine. I guess everybody either in the gang or they say I ain't gonna put nothing in because they they lurking. It'll let you know the evil lurks. Hey man, I don't see nothing in the chat and I don't hear nobody in the gang saying nothing. So I'm assuming everybody understood what was going on and ain't nobody confused, man. Do me a favor, like I say on the bottom, subscribe to the channel if you ain't subscribed, and turn on all your notifications so you don't never miss an opportunity when we going live, man. It'll be like, hey, Tim going live, aka Aranya Grande is going live. Y'all pull up. Let's chop it up. We're gonna talk about price, man. And like I said in the beginning, man, this episode of NQ Intraday Price Action Recap is being brought to you by the magical Fibonacci tool. Trading secrets that feel illegal to know. Hey man, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy Timothy Lee Rogers Sr., aka Aranya Grande. Had your big spot if you don't hablo español. Y'all be safe. I hang these trading streets, man. Gone. Yeah.